Preparing a business for sale checklist. First, I'll give you the 5 categories every seller needs to check off. Miss one, and your deal could fall apart. Then, I'll show you how to identify key person risk within your business and how to eliminate it before a buyer uses it against you. Finally, I'll share the marketing document that serious buyers will require before they'll give you an offer. By the end of this video, you will have a complete checklist you can start working through today to avoid costly surprises as you go to market. A structured checklist can prevent costly last-minute surprises. Many deals end up falling apart over things that should have been fixed months or years earlier. A checklist forces you to confront these issues and deal with them proactively. Think of it as a pre-flight checklist. You don't skip steps when the stakes are this high. Most sellers underestimate the volume of requests and documents that need to be prepared and the preparation that is needed. Financial readiness. This means clean books, tax returns, and normalized earnings. This means 3 or more years of reconciled financial statements, filed tax returns with no outstanding issues, and a clear schedule of add-backs and normalization of EBITDA. Buyers will prepare your profit and loss statements to your tax returns. They either need to match or be reconciled easily. If you've been running your personal expenses through your business, now is the time you need to stop doing that or document it properly. If there's any industry-specific documents or company-specific documents that you need to prepare, now's the time to get those ready. Legal readiness. This includes entity documents, IP documents, contracts, or any lease agreements that you may have. Make sure your corporate records are current. Operating agreements, articles of incorporation, meeting minutes. All customer and vendor contracts should be organized and easily available. IP, such as trademarks, patents, software, they need to be clearly owned by the company, not the individual. Any lease agreements that you have need to be transferable or renegotiable. Operational readiness. If the business can't run without you as the owner, it will not sell for a premium. And often, it could even kill the deal. Document your core processes or your standard operating procedures. Build an org chart that has clear reporting structure and organization. Start delegating key responsibilities to management. Key person risk is one of the top reasons why buyers reduce the purchase price or walk away. I usually tell my clients, you as the owner need to be the chairman of the board making key decisions, not making day-to-day decisions. Customer and revenue readiness. Run a customer concentration analysis. If any single customer is above 20% of total revenue, that's a red flag. Highlight your recurring revenue streams, whether it be subscriptions, retainers, long-term contracts. Review contract terms with customers. Are they transferable? Can you assign them to the new buyer? Do they survive a change of control? Buyers will pay a premium for predictable, diversified revenue. So this is what you need to do today. Download and begin working through a business sale prep checklist. Give yourself the time you need, 18 months, 24 months. This will give you time to fix what problems you may have without feeling like you're rushing through it all. The checklist should cover all these readiness categories. Treat this like a project. Assign it to individuals throughout your organization. They don't need to know that you're preparing for a sale, but just improve operations of the business. If you shoot me a comment on this video, I can get you a checklist that's specific to your company and your industry. What I just walked you through is the exact type of preparation that separates the sellers that get top dollar and the sellers that get a discount. I created a full video that walks through the framework that helps you find hidden profit leaks before you go to market. The reason I want you to go watch that video is because applying that framework can plug the holes and give you the most value when it's time to go to market. Go watch that video next. I'll link it right here.